Okay, I think we're good to start. Let's go, let's go, let's go. Let's go, let's go, let's go. Hello, hello, hello. Good evening. It is currently 26 minutes past 10 p.m. UK time, Sunday, the 3rd of August, 2025. Sorry for the slight delay in starting this webinar, as my computer is being very slow and my resources seem to be taking longer than usual to load up. Welcome to another amazing episode of Technically Speaking, which is a free weekly macro, crypto, and stocks webinar every single Sunday, 10 p.m. to 11 p.m. for the whole of 2025, hosted by myself, Ninja T, aka Fadlan Effendi, one of the founders of Blockchain Sensei. We are a crypto, futures technologies, financial literacy, education, and consultation company. Nothing in this video is financial advice. I do not intend to be perceived as a financial advisor. If you are seeking financial advice, please let me know. Let us know at Blockchain Sensei, and we'll refer you to an accredited financial advisor. If you'd like to come to this webinar, go to instagram.com/blockchain.sensei. So basically the blockchain.sensei Instagram. Click the link in the bio and you will find the free Zoom. And you can get replays at youtube.com/blockchain sensei, in which you will find hundreds of replays. So let's get started. Right, so for the newbies and for those that are regular in attending this live and or watching the replays, you'll be very familiar with this website, tlx.bgsolutions.net. This basically shows the available liquidity in not global, not M2, but specifically the Fed. So, as I said in previous webinars, there has been a end of month seasonal trend where at the end of every month this year, at the end of January, at the end of February, at the end of March, 31st of March, at the end of April, 30th of April, at the end of May, 30th of May, at the end of June, 30th of June, and a little spike here on the 31st of July, there has been a rise in the reverse repurchase, the overnight reverse repurchase agreement. Now, I don't want to go too much into what this is, right? Also, because I don't feel overly qualified to explain it, but that's why we have AI. But all you're going to know is that this reverse repurchase agreement has an inverse relationship to liquidity. Every time there is a spike here, there is a drain here. So notice these spikes, 1, 2, 3, 4, 5, 6. Notice these dips. 1, 2, make sure. So this dip here, 31st of July. This dip here, 31st of June. This dip here, the 31st of May. This dip here, the 30th of April. This dip here, the 31st of March. This dip here, the 28th of February. And this dip here, the 31st of January. All these dips are in correlation with these spikes. When there is a liquidity drain in the Fed net liquidity, there is typically a what? A pullback in risk on assets. Now, 7 months in a row is not a coincidence. So, why has the market pulled? There is never an individual reason why the markets pump or an individual reason why the markets rise. It's almost always a combination of reasons, right? But one of the reasons why the markets have pulled back is because it is completely in line with the end of month trend, where the reverse repurchase agreement in the United States Treasuries has done a spike, which has taken a drain on liquidity. So there's been less available money in the Fed to invest in risk on assets. And in fact, there's been a bit of de-risking sell-offs, right? Also, there's been a rise in the TGA, which is a savings account. Yeah, nothing too weird there. So this is the website that I go to every single day. This is my first protocol. And if you incorporate this in your analysis, I think you would benefit also. Okay, next, let's have a look at, okay, I'm going to leak some signals from my professor, Professor Adam. I shouldn't be doing this, but fortunately, less than 100 people watch this webinar, so we should be all right. So basically, my professor, Professor Adam from university.com, he's one of my main people who I learn from. He has the following indicators. An LTPI, which predicts the long-term, it basically stands for long-term probability indicator. The MTPI, the medium-term probability indicator, and this kind of this experimental regime prototype, where these are, I believe, trending indicators, and this is a mean reverting indicator, i.e., when an asset, for example, pulls back and you expect it to go back to the price it was. That's what mean reverting means. Anyway, we can see that it was very positive on July the 28th. It was very positive on July the 29th. And then bam, on the last day of the month, we had a negative rate of change. And ever since then, the negative rate of change has increased further and further, right? Now, I believe that this is a healthy pullback. If you look at multiple models, including most popularly the M2, which is which measures global liquidity, everything is on a liquidity standpoint, which, mind you, is the most important factor for risk on assets. Let me just come on camera and say this. The number one reason why assets go up and down is liquidity. And I cannot stop stressing that the liquidity of today is still, I believe, global liquidity is still lower than euphoria highs of 2021. And there's more money in the world. So literally more money in the world, but less liquidity, because the money is tied up in different places, whether it's bonds or yields or whatever. Eventually it's going to get sold in the cycle and crypto's going to go absolutely berserk. It's literally been, there is so many, I want to say this, sorry, I'm a little bit tired, but I'm breaking my rebel. Breadcrumbs, the key word is breadcrumbs. There is so many liquidity breadcrumbs that fundamentally show us that risk on assets, particularly altcoins and meme coins, are going to have their time. It's just, we are being squeezed out right now as retail. It's taking longer than we expected. You know, it's August 2025. Donald Trump came in office in November, got elected in November. And altcoin season still hasn't started yet. Why? Because the conditions have not quite been met yet. Now, what is an easy part that we can look at, right? Without reading the news, without getting lost in narratives. In fact, I'm gonna come on camera to say this. You put the time, energy, and effort to learn the following in no particular order, right? In no particular order, but these things, you will be so ahead of the game. So the first thing, again, in no particular order, is historical cycles of finance. You cannot be in this market, in my opinion, with large amounts of your net worth if you have not studied at least the past 25 years in finance, particularly the COVID crash and the 2008 financial crisis. Throw in the 90s tech bubble burst, right? Where tech stocks lost like 90% in value. The internet bubble, right? There's always a bubble. The bubble crashes, but guess what? It almost never crashes to zero when it's due to innovation. That's why Bitcoin pulled back from $64,000 in November 2021, $58,000, all the way to $16,000. Let us not forget that Solana went from $280 in November 2021 to like $7 in November 2022. I don't even want to do the math and the drawdown of that. Okay, so look at history. When you study history, you are not surprised. You are way less surprised by the future. It's so funny when people ask me, what happened to. And they when people say what happened, they usually mean why did the market pull back? It doesn't go up forever, right? Even in a bull market, we are in the bull, right? Now, one of the charts, bull meaning altcoin cycle, right? It's literally just started. So this is one of the most important charts to look at. In fact, I'm going to remove the indicators, remove the RSI, remove the DMI, raw chart. This is Bitcoin dominance, right? So this has been on a consistent uptrend with some pullbacks. Okay. With some pullbacks, but pretty much on an uptrend since October 2022. Since October 2022, in fact, we're going to get two charts up now. We'll get total at the top, that's all the money in crypto, and then we'll get Bitcoin dominance. Okay. So let's look at this. Go to November 2022. November 2022. So between November 2022, which was the bottom of the bear market, this is when Apple stock was like $100 from 500. Right. So in this time, I don't think people are ready for how bullish altcoin season is going to be. I don't think people are really ready. But hopefully this can awaken your souls. Right. Okay. So since November 2022, the crypto total market cap has gone from 0.7 trillion, 0.7 trillion, all the way to 4 trillion. Right? In that time, Bitcoin has not only been taking up market share, it's been increasing market share from 40% to 60%. So most of the money has gone to Bitcoin, and second to that, it's gone to Ethereum, particularly in recent times, and XRP and majors. But I actually think euphoria starts. I think euphoria starts when we pierce 54%. When less than half the market is in Bitcoin. Think about this, right? Think about this. Think about this. Think about this, guys. Think about this. Crypto total market's going to continue to rise, right? Let's say we go to 5 trillion. At 5 trillion market cap, let's imagine 2.5 is in alts. That's when we're going to have the crazy liquidity, and you will start hearing people's grandmas talking about Dogecoin and Trump coin, etc. So, what do I want to look at? What do I want to look at? Oh, I will also go over Adam's portfolio. So, right now, according to my professor, my financial advice, you should never listen to one voice. The optimal position right now is cash. Now, if you didn't snipe tops and your assets are in drawdown, I do not suggest selling in drawdown, because I do believe a reversal is going to happen soon-ish, quicker than you think. I think this market is, because retail is smarter than ever, the whales and institutions know this, so they want to mess with people with the market psychology. So I think that if I'm going to predict, if I want to look into my crystal ball, I think they're following the end of month trend of 2025 of liquidity draining, right? aka assets pulling back, literally like clockwork on tap at the end of every month. I literally think that give it a week, maximum 2 weeks, the market's going to shoot up again and then crash back down at the end of August. And I think we may see that pattern for the rest of 2025, but basically setting higher highs and lower lows. So eventually just going higher and higher and higher. Yeah, so the optimal position right now is cash. And as you can see, 1% cash. This portfolio signal is very new as of the start of this month. Okay, let's go to. I want to go to be completed. Ah, here we are. Okay, if you haven't seen this, I think you've not spent enough time in macro. In fact, let me make it clear to you guys that I spend the majority of my time in macro, not day trading, not doing options, not doing meme coins, macro. I do spend a lot of time in meme coins, but I also spend pretty much my life also in this market, right? You need to know where in the cycle are we. This is a representation of global liquidity with a 6-month lead. Look how Bitcoin is basically a global liquidity proxy. Oh my God. This is my professor on Twitter. Okay, guys, you should follow Crypto Prof Adam on Twitter. This is my professor. And what has he been saying recently? Mm. People talk about M2, the global liquidity proxy. They talk a lot about global liquidity, but few mention how they are pretty much both the same. Cross-border capital, which is a global research firm. You should follow them on Twitter as well. They specialize in just viewing liquidity. Cross-border capital will want to kill me for saying this, but I think they are both useful and they can be used to cross-reference each other. E.g., last month, MC was showing higher before the higher liquidity revisions hit the printing press. This correlation between MC and price won't last forever, but while it does, bears will get destroyed. Well, we don't know how long, the correlation is going to be. As time has gone on, it's almost like crypto has become more correlated with the stock market than ever, right? Especially with the Nasdaq. Total global liquidity continues to expand at its current elevated pace. Howell is the founder. Michael Howell is the founder of Cross-Border Capital. This index is not just M2, but also measures of the balance sheet capacity of the financial sector. Okay, I'll leave that there. I want to check out. This is Michael Howell, by the way. This is Michael Howell, founder of Cross-Border Capital. Definitely a great guy to listen to. Very, very underrated as well. PBOC, the People Bank of China. So understand there are three main liquidity providers in the world. Let me see if anyone on this Zoom actually knows. Does anyone in this Zoom know who the three biggest liquidity providers in the world are?
Is one of them BlackRock?
Oh, never mind. I'll be shy.
Is
Someone could
one of
have
them
went onto AI and lied. It's okay. The number one is obviously the Fed. Oh,
Did you know
is
it
one
is?
of them BlackRock? No, no. BlackRock is the biggest asset. Unfortunately not. But you know what? I respect the pride. BlackRock is the. Sorry, say that again. All right. Anyway, BlackRock is one of the is one of the biggest is the biggest asset management company in the world. In fact, let me just show you guys something. I will go back to liquidity provision, but um, if you type in on Google ADV ratings, then you go here, it shows you the biggest asset management companies in the world. Yeah, and you can see here the BlackRock have $10.4 trillion in assets under management. So they're the biggest asset management company in the world, followed by Vanguard. But they are not the biggest liquidity provider. Liquidity provider meaning is in actual provision, control, and custodian of the flow of monies, right? Number one is obviously the Fed, the American Fed, right? Number two is the PBOC, the People Bank of China. And number three is the ECB, the European Central Bank. Now, the PBOC did not used to affect the market as much as it does today. Even though the Fed is still by far bigger than the PBOC, the market share of PBOC in terms of global liquidity has improved drastically in line with China, right? With China's growth. So as we can see, it's gone from negative liquidity injections to this insane number here, which I don't even know what it is in the hundreds of billions or trillions, but it's basically a lot of money. Shout out to the homies Earn Your Leisure, of course. Ian Dunlap, the master investor, Rashad Bilal, Troy Millings. They do a show every week called Earn Your Leisure, and I try to catch up as much as I can. USDC is now coming soon to Hyperliquid, which is the biggest decentralized perpetual futures platform in the world. This is basically good for the whole market because we want liquidity. We want as many on ramps into the crypto market as possible. And such infrastructures, such as the second biggest stablecoin in the world, being onboarded to the biggest decentralized perpetual futures platform in the world, is bullish in line with the rest of the market. So, as many of you know, there have been no rate cuts. I will read the latest article by Thomas. Shout out to Thomas on Markets, by the way. His Twitter is Thomas on Markets. This guy here, he used to post just natively on his Twitter, but now he partnered with Milk Road, which I'm assuming is some kind of financial information company. But yeah, let's have a look at rate cuts. Before we get into this article that I myself have never read, so I'm going to read this live on the webinar. Let me make you guys, in fact, let me see if I can test somebody in the Zoom. Is anyone in the Zoom confident enough to explain the relationship between rate cuts and risk on assets? Salman, are you able to explain why lower interest rates are good or bad for risk on assets?
Well, firstly, there's a delay, so you're going to reply 10 seconds later, right? So,
Salman's feeling shy. All right.
right. Basically, if the rates are cut, there's more spending, so it's likely there'll be more money to spend on altcoins. So we're hoping September time there's a rate cut in USA about the main players. So from then we'll hopefully see some movement, big movement in size.
Yeah. He's on the right track, and yeah, unfortunately, there is some kind of 10-second lag. So let me explain as eloquently as possible. First of all, what are interest rates? Right? A rate by rates they mean interest rates, particularly in the United States. Remember, the US dollar is over 50% of the entire world's liquidity pool. More than 50% of all the money in existence, if you add all the euros, all the Japanese yen, all the pound sterling, all the Nigerian naira, all the Indonesian rupiah, and every other currency outside of the US dollar, and you put it in a pot of a global liquidity pool of around $110 trillion, over 50% of that money would be US dollars. Okay, so understand that first. By rates, we mean interest rates in the United States of America, which spills over and affects the rest of the world. Okay, so what is a rate cut? A rate cut is an interest rate cut, a reduction on interest rates in the USA, particularly for people who are taking out bank loans, personal and business, and with credit cards, right? So right now, the interest rate in America is 4.25 to 4.5%. That means there is some kind of national average, right, where the cost to borrow money is around 4.25 to 4.5% annually. When this interest rate is high, people are less incentivized to take out loans because it costs more to pay back. When the interest rate is low, the appetite to borrow money increases, which then spills over into risk on assets. Remember, the stock market, historically just the stock market, but now the stock market and crypto, and also commodities like gold, are a reflection of true global sentiment. Everybody can say this and say that, but at the end of the day, money talks, right? And money has dictated in the world at time of recording that $4 trillion of the world's liquidity is in crypto right now. And I expect this, in my opinion, to hit somewhere in the 10 to $12 trillion mark during this cycle. Okay, as long as there is no black swan event, of course. So, let me explain this. So, to wrap up, interest rates being cut. That's what everybody wants the Fed to cut. Investors wants the Fed to cut. Interest rates lowered is bullish for risk on assets. Interest rates increasing is bearish for risk on assets. Interest rates staying the same is neutral, right? If, for example, they cut interest rates in September and then they continue to cut interest rates for like 6 months, right? And then it's maybe March 2026. And then they decide to increase interest rates after cutting them for multiple FOMC meetings, aka every multiple 6 weeks in a row. And then that may be a top signal. In fact, that is likely a top signal to exit the market, right? So that's the fundamental lesson. Let's get into the article. When will the Fed cut rates? Let's run through the main points of the FOMC. Yeah, this is Mark Road Macro, the newsletter that breaks down monetary policy smoother than Powell dodging Trump tweets. Powell, obviously, Jerome Powell, head of the SEC, Securities Exchange Commission, that makes the monetary policy. Powell holds steady, but cracks are showing. Rate cut chaos inside the Fed's July meeting standoff with Tony Greer. Strong US earnings boosted by big tech results. Okay. Powell holds steady, but cracks are showing. It's that time again. It's Fed week where the finance world gathers round to watch a man in a suit talk a lot, but not really say much. I would recommend everybody watches at least one. In fact, watch the recent FOMC meeting with Jerome Powell. It's like watching paint dry, but it's important to just at least watch it once. President Trump has been continuing his attacks on Fed Chair Jerome Powell in recent weeks, demanding the interest rates be slashed. Trump wants interest rates to be slashed. Remember that. He's a man who a large amount of his net worth, I don't know what the true amount is, but an extremely large amount of his net worth is in altcoins. So what happened at the FOMC meeting this week? Are we seeing fracturing within the Fed as economic data divides opinions? How did markets react and what will happen next? Let's take a look. So what's happened at the meeting? In a surprise to nobody, interest rates were held steady by the Federal Reserve on Wednesday. Markets were expecting a 98% chance of this occurring. So no surprise. It was another wait and see meeting, although the Fed still clearly has a cutting bias. So the Fed is saying we're not cutting yet, but we intend to cut. The market will price this in. The market had hoped that Powell might be willing to lean dovish and open the door a little wider towards rate cuts restart in September. This is what we expect. But instead, Powell press conference had a slightly hawkish bias. Powell reiterated that the Fed is well positioned to cut rates when needed, but dampened expectations of a September rate cut without closing the door immediately. President Trump's tariffs have injected uncertainty into the economic outlook and the Fed's policy outlook. Powell said a reasonable base case is that effects on inflation could be short-lived, reflecting a one-time shift in the price level, but it's also possible that inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. He added, we're still a ways from seeing where things settle down. Yes, we are learning more and more. It doesn't feel like we're very close to the end of that process. Powell fired a shot back at Trump, who has been demanding rate cuts, primarily to ease the US government soaring debt interest costs now at $1 trillion per year. Remember, there is also something called a debt ceiling, right? For those that haven't heard me say this, I'm sorry to keep repeating this. Remember, we live in a 3-to-1 credit to debit ratio. There's about $330 trillion of debt with only $110 trillion to back it. Countries, particularly the USA, because that's the most important country that we pay attention to when in financial markets, right? There is a ceiling of debt that a country is allowed to get to. And when we hit the ceiling, they're going to do what? Turn on the printer and turn up the credit line. Okay? So, Powell said, we don't consider the fiscal needs of the federal government. No advanced economy central bank does that, and it wouldn't be good for us to do so, as it would compromise our credibility. It seemed odd that we didn't get an immediate angry reaction from Trump following the press conference, but then today it arrived. Jerome, you're too late. Powell has done it again. He is too late and actually too angry, too stupid, or too political to have the job of Fed chair. He is costing our country trillions of dollars in addition to one of the most incompetent or corrupt renovations of buildings in the history of construction. Put another way, too late is a total loser, and our country is paying the price. If you want to go deeper, sat down with Tony Greer just after the meeting to break it all down, what the Fed's news means for inflation markets and the second half of 2025. Oh, there you go. I'm not going to watch this right here, right now. But it's good that they made a video on it. Right. Okay, nice. I'm gonna tweet this. This is my next watch. Next watch. All right, cool. In recent years, the Federal Reserve has almost always been unified in its interest. Yes, okay. Before I go into this, I want to shout out my boy Alexander Lorenzo. Salman, I watched the video. I watched it. It's very, very interesting. Why aren't all coins pumping? Yes, this is what you call confluence, right? Where you do your own research, which everyone should hear, do their own research, and then you'll find that sometimes, coincidentally, things that I say, other intelligent people are saying. I only watched this video today, and I'm reading this for the first time, but it's very, very, very interesting. I'm going to come off camera, by the way. Just come off camera. Okay. Right. In recent, a fracture in the Fed. Yes, I remember hearing Alexander talk about this. In recent years, the Federal Reserve has almost always been unified in its interest rate decisions, but not this time. This week, we saw two dissents, so members from governors, the first time this has happened since the 90s. So they disagreed, right? I think this guy said, Alexander said there's like 13 members of the Fed. And for the first time in an extremely long time, since the 90s, there's been more disagreements than before, where before, everyone would basically be in line. Governors Christopher Waller and Michelle Bowman both thought a rate cut was the right thing to do this week, so two of them, and disagreed with the decision to hold rates steady, so not increase or decrease them. Some people have argued this dovish stance is a political choice to get in Trump's good books, as governors jostle for the top job, with Powell's term as Fed chair ending in May 2026. This is when, okay, there is a theory that we are going to go through a super cycle. Okay. Now, I don't want to say we are going to go through a super cycle, but a super cycle would mean that we're going to go higher and higher and higher for a long time. A long time being till the end of 2026. If that happens, that is very, very good for us as risk-on investors, but it's very bad for the world. Because what do they say? The taller they are, the harder they fall. So be ready for such a market condition. Yeah, if hard to over predict everything, but this this is basically around this time. It's going to decide, in my opinion, is it the end of the bull market, or are we going to continue for a few more quarters, which would be beautiful as an individual. Obviously, we should be compassionate that we'd probably end up in a huge recession in 2027, which is not good for people's jobs. JP Morgan's chief US economist Michael Feroli jokes that two job applications were attached to the FOMC statement. Regardless, both Bowman and Waller laid groundwork for their dissents for the meeting. The disagreements. Bowman pointed to signs of fragility in the labor market, while Waller said slowing private sector payrolls also signal underlying weakness in the US employment landscape. At the press conference, Powell said policymakers will be paying attention to downside risks in the labor market that are certainly apparent. But he described the labor market as solid and said the Fed is closer to its goal of fostering maximum employment in the economy than it is to 2% objective for inflation. Okay, so they're closer to maximum employment. Okay, this is really good because there's basically a chart called the ISM. Let me see what. And the ISM chart is basically in line with bull market, historical bull markets. And when this charges up, it basically means the US economy is doing well. Economy is doing well. People are happy. People are spending. Money's flowing. Interest rates are low. People are borrowing. Basically, risk on assets go up. Let me see if I can find an ISM chart. Hopefully, it's in the images. I don't want to waste too much time on it, but yeah, do your own research on this chart. But I can't find like a up to date one. Anyway, let's go back to this article. He said there have only been 14 dovish governor dissents since 1987, excluding hiking cycles. The Fed has typically gone to cut 50 basis points in the next 3 months. I think they mean disagreements here. How did the markets respond? While the Fed is still firmly in a cutting cycle, so basically, this basically means that it's impossible for the bull market to be over. I know there's all these technical indicators that say the RSI is high and this and that, but monetary policy and mid to long term thinking is what's going to make you money in this game. Well, I don't like to predict the short term too much. The dollar, as measured by the dollar index, rallied for the fifth straight day to its highest close in 2 months. Okay, this is another reason why risk on assets have been going down, because if you look at the DXY, which is DXY, yeah. DXY, okay. Now we'll go to, yeah, this has been pumping up since the 1st of July. So the dollar's just got stronger, so risk on assets got a bit weaker, right? Now we're pulling down. I wouldn't be surprised if the market pumps on like Wednesday, then everybody's fears are over with again. For weeks, we've been outlining the case for a reversal in the dollar, largely due to incredibly bearish positioning and sentiment. So yeah, dollar's been falling for the whole year since January. So this has been good for risk on assets. We've bottomed out a little bit, and maybe we might climb up for a bit and then shoot back down. Nothing to worry about. It's nothing to worry about, in my opinion. Major US stock indices like the S&P 500 and Nasdaq, so top 500 US companies and top 100 US tech, initially wobbled after the slightly hawkish FOMC press conference, but then faced a huge comeback later in the day, reversing the earlier loss. Let's have a look. Let's have a look at Nasdaq. Top 100 US tech. Okay. Nothing crazy would actually. Okay. So what happens next? Bitcoin also fell during the press conference, but then rallied higher again. Okay, so we're talking ultra low time frames. So what happens next? Now we wait for the next FOMC meeting, which will not take place until September the 16th, 17th. So put this date in your diary, specifically every 6 weeks. Powell's hawkish tone yesterday caused markets to slash rate cuts expectations for the September meeting. Earlier this week, market pricing of 25 basis point rate cuts, 0.25%, in September was as high as 65%. Now this has been cut to just 43%. So there is a website called tmegroup.com, and this is where you can look. So Federal Reserve Watch. You can look at things such as when is the next meeting, and I don't know where on this website they got the screenshot, but basically the sentiment is now that right now they only think that there's a 43% chance, according to CME Group, of rate cuts. But I wouldn't overly rely on what CME Group thinks. Okay, 1 second. So look. You know what? I'm frying my own brain. Just go back here. Yeah, basically, according to CME Group, they're way less confident of a September rate cut. But I think that things like this are often there to basically mess with people. But the Fed will see a lot of new data between now and then, including 2 rounds of inflation. These predictions always go up and down as well, so I don't overly rely on them. While it's almost 2 months until the next official Fed meeting, we do also have a Jackson Hole in the meantime taking place on the 21st and 23rd. This is an annual central bank jamboree when global central bankers gather in Wyoming to talk about central bank stuff. Informalities, but it could be important because the Federal Reserve does have a liking for using Jackson Hole to signal big policy pivots in front of the dramatic backdrop of the Rocky Mountains. This has happened on 2 occasions in the last 3 years. Powell's famous "There will be pain" speech in 2022 rocked markets and was followed by the Fed continuing to relentlessly hike rate cuts, so increase them, which is very bad for market risk on assets. And in 2024, Powell signaled a sudden, unexpected dovish pivot at the Jackson Hole, which is this thing where central bankers link up, which was followed by the start of the Fed's current rate cutting cycle in September 2024. Let's not forget what happened in September 2024. Let's just go to Bitcoin. Let us not forget about what happened in this historical time period, because between September 2024, my friends, I remember I moved to Birmingham during these times. September 2024, my bad. Okay, look what happened to the price of Bitcoin between this date. I remember what I was doing. I just moved out of my apartment. I remember what I was doing. I just moved out of my city center apartment and I moved to Birmingham. And then I saw the markets. I saw Bitcoin fly up from less than 60K all the way to 100K. I think something like this could happen where we may be flat or even pull back for the whole month. Like be prepared. Be prepared for Bitcoin to go down to, I don't think 100K, but maybe 104K. Right? Be prepared for a bearish August. I'm not saying it is happening, but am I bullish for the end of the quarter close? Absolutely. I am so confident that Bitcoin is going to close this quarter on the 31st of September in positive, whilst Bitcoin dominance falling and liquidity being injected into altcoins. This is what I think is going to happen, right, this quarter. So that happened in September 2024. Is that going to happen in September 2025? Who knows? It's very possible that Powell could use Jackson Hole next month as his main signaling event and firmly signal whether or not the Fed will restart rate cuts in September. wrapping up, the market has been hoping for a dovish tilt, but instead it got a slightly hawkish tone. The Fed largely still seems comfortable with basically dovish means cutting interest rates, hawkish means rising interest rates. So think like a hawk, like a bird, like it rises, right? So yeah, the Fed largely still seems comfortable with restarting rate cuts given the uncertainty on inflation, although there's now clear disagreement among governors. But taking a wider view, not a whole lot changed this week, with the market still expecting cuts to come at some point this year. This is the most interesting thing. The Fed is still firmly in a cutting cycle. And in fact, slow rate cutting cycles are historically much more bullish for risk and assets than fast cutting cycles. Okay, so so the blue represents slow cycles of 1954, 57, 1960, 71, 1980, 1984, 1995, and 1998. And this was okay. Yes, this. Okay. Right. Okay, I understand. So the last time we had a slow cutting cycle was in the late 90s. The fast cycle, which is the yellow, is in line with previous bull markets of 2020 to 2021. And just after the what do you call it? The 2008 financial crisis. Okay, this makes sense. This further supports the possibility of a super cycle, which I'm not going to call out yet. Okay, thank you, Thompson Markets. That was extremely thorough. I'm glad that we read through that. Another person that talked about similar things like this again is Alexander Lorenzo on his latest video, Why Aren't Altcoins Pumping? Let's see if there's anything. Let's have a look at the latest capital wars by cross-border capital. I think this is the same. Okay. All right. We are often asked what will derail global liquidity, which again is the most important driver of assets. And so ultimately crush this bull market. The answer is impossible to give, but we can detail the potential fault lines that we closely watch. Spoiler alert, these do not include price to earnings multiples, nor traditional economic data. Rather, because the rise and fall of liquidity is part of the debt refinancing cycle, we focus on collateral reverse repurchase markets where debt and liquidity interact. To cut the chase, while risks are plainly building with the endless piling on debt, we see nothing in the funding market that signals any potential dislocation. Evidence of broad daily index measures of market liquidity that includes both spreads and measures of transaction volume shown below. Its recent low point in late 2022 followed on consistently with and shortly after the equivalent low in our funding measures of global liquidity. With market liquidity. So basically things are going up. That is the conclusion on that. Have a quick look at my friend AI XBT, see what he's got to say. He's not actually my friend, he's an AI. But because he's an AI, he can tweet a lot more data than humans. And he's saying really outstanding. 98 companies just raised 43 billion in 60 days to buy BTC. Not adoption anymore. It's a race against each other for limited supply. Wow. Market thinks large USDT flows, 137 million to Coinbase, signaling sell pressure, but paired with record ETH inflows and Cumberland complex positioning, we're seeing a new game. Institutions need stable coins for leverage. DeFi TVL, so that's total value locked, and you can go to DeFiLlama.com to see this. At all-time high, 330 billion. Blue chip NFTs pumping, different era. Uh, Bonk, the biggest meme coin in Solana, burns 0.62% supply while BlackRock holds 740k BTC. Okay, this makes me very, very bullish on Base. Samsung Pay and Coinbase just connected with 150 million users, but I mean like things on the Base chain, right? So check out things like AERO Finance and Brett, the biggest meme coin on Base. They've just connected 150 million users to instant crypto settlement, grabbing an additional $120 million in USDT, base pay launch in USDT checkout, and a total stablecoin market cap of plus 22% year to date. Abstract hitting 230k XP. So Abstract chain, Abstract is a layer 2 by the Igloo ecosystem, you know, like Penguin, little pudgies. Hitting 230k XP in a single day isn't just a number. World Series qualifiers plus 50k prize pool launching. Okay. BlackRock buys 4.5% more ETH than BTC. Oh shit. ETH flows. Oh, money isn't guessing, it's choosing. Yeah, this is very good. Very bullish for ETH. I think ETH will hit like 12, 15k the cycle. Watching Coinbase transform from crypto exchange to financial infrastructure in real time. Chase Bank brings 80 million plus normies direct to Base. Samsung Pay integrates for instant buys. 3-day, one trading via Base and Aerodrome. Working directly with SE. Oh my god. Watching Coinbase transform from crypto exchange to financial infrastructure. 3-day, one trading via Base and Aerodrome. Okay, this makes me very, very bullish. Where are we with Aerodrome right now? Aero. Nice. I think this is the Aero buy signal. I can't lie. That looks like a perfect chart. Is it the price? Is it the price? Yeah, I think it's the price. Just gone to the 12-hour RSI. Okay, I'm gonna call it. I think it's the Aerodrome bottom. I think it's the Aerodrome bottom. I've seen charts like this before. I don't think it's gonna go lower. If anybody wanted to buy some, this is me talking to me as well. If there was a time, I think there was a time. Biggest liquidity provider on the base chain. I think the lowest it could go is 66 cents, but I don't think. I think this is the lowest it could go, but now is pretty much a good time, in my opinion, from what I can see. Thank you, AIXBT. SEC Task Force White House both leaning on Chainlink for policy. JPM already building stablecoins on this framework. Regulation from the inside. How's Chainlink doing? This is another thing. Okay, here's a glitch. Go to AIXBT's Twitter, the Frog's Twitter, and then things that it tweets about, have a check of the technical analysis. I know loads of link bulls. I've never really benefited from Link's price action, but ooh, I think this is a good chart. I think this is a good. Like if we're talking just it's a good chart. It could go this low if you're lucky, like $13. But Yeah, this makes sense. Utility coins gotta have their time, right? Okay, what else really important? Nasdaq listing $4.8 billion in principal token market, mandatory KYC wrapper. USDE, I think this is a new stablecoin. Isn't building another stablecoin, they're building the pipes. Stablecoins move 2 times Visa's volume, so Visa adds Stellar Avalanche to their settlement stack. Sometimes the house joins the casino. I'm very bullish on Avalanche as well. Let's have a look at where we are with AVAX. Hopefully a really good price. Nice. Yeah, today's price is a good price. Yeah, bottom of the 12 hours. Yeah, today's price $21. Anything around $20 is good for AVAX. Circle dropped CCTP V2 on Hyperliquid. I don't know what that means. So finally found its groove. Bonk owns 49% of launches while Camino leads DeFi. So by Bonk owns, so Bonk is the biggest meme coin on Solana. They got something called Let's Bonk. Now that's 49% of meme coin launches on Solana. Hyperliquid just processed more volume than Robinhood. Oh my god. I am ultra bullish on Hyperliquid. I want to spend more time on the actual perp platform. If you haven't checked it out, I will. And you do futures, I would recommend it. Let's have a look at Hyperliquid. Ooh, I think now's a good time to buy Hyperliquid. Yes, yes, yes. I've been looking for like a decent entry price. I'm gonna call this one. Yeah. I don't think we're gonna go to 31. We might touch 35. It's a great accumulation zone, in my opinion. And I'm tempted to do a futures long on this. This is a very tempting long. My DMI is fucked up. You take that. It's there. Yeah, I don't. I think we might tap 35 and then go back up. That's what my basic gut is telling me. Long in from 35. Oh, yeah. But on spot, $38, good price. So yeah, Hyperliquid is wow, $12 billion. Okay, I can really see fundamentally Hyperliquid going to, I'm gonna say like $200 this cycle. So yeah, great asset. And I was really worried that it was going to be hacked or something. But everything's been fine so far. USDC finally dropping the trading only act. These tells from $930 million of Fartcoin. Let me have a look at cookie.fun. So this website kind of measures mind share. Um, Back in the day, Fartcoin used to be here a lot, so I'm not really too sure where the buy is. Maybe retail just love this meme coin, but I've never. In fact, let's have a look at. Have a look at Fartcoin. Oh man, you want to see? I've not looked at this chart for a long time. Okay, $916 million. Oh my god. I think Fartcoin is gonna last for the cycle at least. There's so much liquidity in here, and I look at these things as tools to increase my Solana, right? I think Solana could go to 500, maybe even $1,000 a cycle. So I want to find betas. Oh my god, I am so tempted to buy some Fartcoin with Solana against Solana. Oh my god, yeah, 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 yeah. Okay. All right, I'm going to do this. What I love about this webinar as well, I find these fantastic. Yes. Okay. I'm going to give away a spot trading idea right now on this webinar. Obviously, not financial advice. It could all go wrong. Coin could rug. Don't top all your Solana for coin. But I'm going to take a trade on this and then swap some Sol into coin and try to ride this 50%. But remember, if you can't buy it 3 times, you can't afford it. So make sure that if you are going to take a position in something, you have at least 2 more levels in which you are willing to buy in again at with the same, if not more, amount of capital. So do something like this, right? Where I'd put like a third here, and then if it drops a third here, and then maybe even double up here. If it were to go down, but I honestly don't think it is going to go down. I think it's going to bounce from this support. It's bounced 1, 2, 3, 4 times, and this is the lowest the RSI has ever been on Fartcoin. So, and if you go to the just go to where it is in CoinMarketCap. Oh yes, and the Fear and Greed is at 48. Oh yeah. We're good. Fartcoin. We dropped that. Fartcoin. Honestly, one of the biggest glitches that you can do in this world is to learn Solana meme coin trading with the intention of increasing your Solana. I think it's the most. I honestly feel like meme coin trading is the most efficient spot kind of trading without
I've actually
leverage.
done like 5x just off meme
Oh
trading
my
whilst
god!
I've been
And
on
it's
this
on
car.
Coinbase Exchange. Come on, man. Come on, man. Come on, man. Wait, you done a 5x whilst on this call
Yeah. Been watching on the deck screener.
just now?
Yeah, before, bro, there was a con call with Meow Meow. And it went up, and then, yeah, bro. But I only put like 15 in. Like, so I'm just building my Solana slow.
Wow, such a digit. Okay. All right. So let me give you some advice here. Like, but for anyone who's good at trading, which is very, very rare, after you've made a lot trading, consider putting some of the trading profits into undervalued investments. Like, I know this sounds crazy, but what you would have stacked in Sol, maybe stack it in Fartcoin. You know what I mean? And then
Yeah.
build that position and then get that 50% bounce. And then at this bounce, this is just a trade idea, get your Sol back and then just keep some Fartcoin in the long term. Because I honestly think that this is gonna go to 10 billion market cap, bro. Like it survived the trenches. Like this is what you call a rise. This is a rise in the trenches here. You know what I mean? It's on Coinbase now. Think about it, right? Would the only crypto exchange in the entire world that's from the American stock market list coins for nothing? You know, Coinbase are the most strict. It's harder to get on Coinbase than any other exchange. And Coinbase is the biggest liquidity provider and volume of Fartcoin. Come on, man. It's all lined up, man. It's all lined up. It's all lined up. Thank you for this. Resale's going 930 million at Fartcoin right now. Meanwhile, the market just crossed 2.5 billion. Across major chains, the Citigroup is building on yield stack. Okay. Free Wallet just bought 18 CryptoPunks with 1,423 Ethereum. Only 250 listed before next 50% floor jump. Supply shock loading. Okay, this is good for the whole NFT market. Chainlink state pricing and Cardano protocol own liquidity. Okay, whatever. Real estate firms will own more Bitcoin than most countries by 2027. Cardone Capital, so that's Grant Cardone, already hold 1,100 BTC. Metaplanet raising 3.7 billion. Property companies holding BTC jumped from 60 to 116 12 months. The real flipping isn't ETH, it's concentrate to Bitcoin. Okay, this is very interesting. Let me go over to the meme coin section of CoinMarketCap. So for those that don't know, you can go to coinmarketcap.com and then just click here on the meme section. Now, it's a meme war right now. Like, we know what Dogecoin is. Shiba from the previous cycle. Pepe rise in the bear market. And obviously, this is an internet meme. And right now, it's a war between the penguin and the dog. Right? Because these are both on 2 billion market cap. Don't know why the market cap's not showing. Just put them on new tabs. Sitting both on around 2 billion each. Bonk generating close to $1 million daily. So literally $1 million daily in revenue. Okay, the biggest meme coin on Solana because they've got a launch pad now. While Pudgy spends millions on New York City marketing, yet both trade at 2 billion market cap. Markets paying same price for noise and signal. So what the frog is basically saying, AIXBT, is that it believes that Bonk is worth more. Will mindshare or utility? Yes, because Pudgy Penguins has more mindshare because of their cute characters on social media marketing. But Bonk is makes more money, right? So according to AIXBT, it's predicting that Bonk is going to do better. It's crazy how, guys, you can reply to AIXBT and the AI replies. This shit, wow. Assalamu alaikum, you're right. How you doing? I'm just going to be in this webinar for a few more minutes. One of my homies just came through. But ETF caps are rotating into CME's Sol futures. Okay, bullish on Sol market. Okay, cool. That's enough of AIXBT. I'm going to leave this here because I'm going to execute on this trade idea. I do believe that the Trump coin is going to come back. But only when the market conditions are set for it. So there's 2.2 billion invested in low pudgies and 2.1 in bonk. So yeah, I don't know. Is it going to be bonk? Is it going to be pudgies? But I got my bet on Pengu. I can't lie. Okay, let's go over some TA. All right. We're gonna just cover, as always, let's have a look at SIXRE, S&P 500 real estate indicator. I'm just waiting for this to basically bottom out and then rise, which would be very, very positive for the rest of the market. We can see here, this is okay. So one thing that makes me very bullish is that the US 10-year, 5-year, and 2-year yields are on a downtrend, and this is good because these are basically yields where people could, well, mainly countries, lock up their money with the American government. The less yield America can promise and provide, the less incentivized countries are to lock up their money with the American government, right? Like, why would you if you're going to get less yield? So this continuous decline is further confluence to me that we are continually bullish. Vanguard Total World Stock Index, of course, we're taking a minor pullback after this huge run that we've been through from April to now. Now the market's cooling off. That's fine. S&P 500, I believe, yeah, cooling off. Nothing crazy after a huge run. Again, do not be surprised. We're going to have a bullish Q3, but a bearish August. Please remember that. We can have a bearish August and still end Q3 with a bang. I've seen it so where the market is bearish for 60 to 70% of the quarter, 80% of the quarter, and then bang at the last moment. So, yeah. Okay, so this is the copper gold ratio. As we can, so to the price of copper in gold. When this turns around, it is in line with bull markets. So look, this is the 2021 bull market. This is the 2017 to 2018 bull market. When it costs more and more copper to buy gold, that is the start of euphoria. So taking a dip here, we might meander. As this turns around, this is going to be in line with the bull market. Okay. Nasdaq, again, it seems like we're topping out here. That's fine. Yeah, DXY obviously is rising. Do not be concerned too much if this continues to rise. In fact, if this continues to rise, risk on assets will pull down. This is all part of regular price action, in my opinion. Gold continues to meander at this range. I do believe at some point we will see a sharp fall in gold, and this will be a liquidity injection. Please understand, yeah, that from here to here is probably around $8 trillion. The journey from here to here is like 4 times the value of Bitcoin and 40 times the value of Ethereum. Okay, and maybe 800 times the value of Solana. Not everybody thinks in maths like me, but this is how I see the charts. I see them all as liquidity injections or liquidity withdrawals. Okay. Tesla, like I said in previous webinars, I've exited Tesla, got my clients out of Tesla. I don't know what's going on with Tesla. Elon's crazy, and yeah, I'm not invested in that. Meta is continuing to soar. I do not do options trading, and I don't really touch too much stocks. However, I think that this is basically very, very bullish for crypto and risk on assets, because it basically shows the flow of money going into risk on assets, particularly tech stocks. Snapchat, as I've said time and time again, Snapchat is one of my top stock picks. It is ranging between the $10 and $7 range. However, I do believe that we are going to break out upon euphoria, and Snapchat will be one of the best investments of the entire bull market. Google, again, I don't do stocks. I don't really do options. However, this to me is just a positive indication of liquidity injection into risk on assets and global sentiment. We had Unite in the room ask me about SoFi. I can definitely say that I would not buy SoFi at this price. I will tell you the exact prices that I would get in using a Fibonacci retracement. Rate price is $13.35. Entry price $15.69. I would definitely not touch it until I would definitely not touch this. I'm basically, let me give you my percentage surety just in terms of technical analysis. I am let's say 85% sure it's going to go to here. I am 70 to 75% sure it's going to go here. And I am at least 60% confident that it's going to retrace down to 0.32, according to technical analysis, down to 13.35 at some point where you could be waiting a long time. So the journey could go as following. It could be like this. And then eventually be here, but this might be a bear market price. That's just on straight technicals. I don't know much about this company, but I can see that it has had positive earnings, and with it being a top 100 US tech, is in line with the rest of the index going up. I don't know much about the individual company. But yeah, I hope that helps with SoFi. Again, PayPal ranging between this kind of like sub 70 and $54 mark. Everything, in my opinion, is bullish about this company, and this is an artificial price suppression. I don't want to sound like a broken record, but PayPal will have its time. Riot Blockchain, I'm extremely bullish on this company. However, it has extreme price volatility. Remember how far it is from all-time highs. Riot Blockchain around $10 is a fantastic buy in my opinion. We will break out of this range inevitably, as it's one of the biggest Bitcoin mining companies in the world. Okay, guys, I'm going to wrap up here, I reckon. Unless anybody has any dying questions. I hope you guys have been engaged. Thank you for coming to the Sunday webinar. Any questions?
No questions, Ninja. No questions.
We're good? All right, cool. I'm gonna catch you guys soon. Thank you very much.